Well, what's just happened in the last 24 hours in the stock market? It's been bonkers. There's been a million news stories out there. So today I'm going to try cover them all for you with companies' earnings. We've had macro news. So hopefully I can give you guys a little bit of information in this video here today. First thing, stock market's having a little bit of a break. The rally's having a bit of a pause. You can see the S&P's down about 2.5%. Nasdaq's down a little bit more. You can see here that's down about 3.5%. So a little bit of a pullback creeping in, which I think is certainly good for the market. A bit healthy with the run that we've been on. Obviously, with that little bit pullback, a lot of the new investors, a lot of the newbies are running around panicking, screaming, what's happening? The stock market's crashing. And you think, you ain't seen nothing yet, guys. You wait until you have a stock market crash. You guys that have been through those stock market crashes, you know what I'm saying. This is nothing. This is nothing to a few people that have been through some stock market crashes. But what it has created is it's created some opportunities to go buy a few things, which is great. My cash pile was getting a little bit too heavy, as you guys know. We've been locking in a lot of profit, and with the little pullback, it's created a few opportunities. I think I've bought around about 7 stocks today. So yeah, a little bit of spending, which has been good to see. And if you do want to know what I've been buying, obviously you guys on the Patreon know my live buy and sell alerts. So you know what I've been out there shopping with. By the way, a lot of people ask me what platform do I actually use. So I actually use Trading 212. So if you do want to join that as well, there's a link in the description. You get a free share when you sign up for that one. They offer the ISA if you're from the UK. You've got to be using your stocks and shares ISA when you're investing, guys, if you're not doing that. But first of all, why is the market pulling back? Well, it seems like the market's getting a little bit nervous about AI at the moment. You know, a lot of this rally is being based on AI and, you know, this expectation that AI is going to drive growth and revenue and profit. And everyone's kind of looked around and gone, well, what happens if it actually doesn't? You know, we're basing so much on this potential of AI helping us for the next leg up. But what happens if it's not that big of a contributor yet, which I think is generally quite a serious thing to talk about. I do think that could be something to keep an eye on. And it seems like all at the same time, everyone's looked and gone and thought, hold on, why didn't we think about this? And as always, though, you know, the market is looking for a reason of why it's gone down. Also, the data out there still doesn't look that great in the US. You know, when you look at some of the US data that's coming out there, you're like, you know, the Fed being slow to cut is starting to show a little bit, or not cutting at all has started to show in the economy a little bit at the moment. So we're seeing the US layoffs for October surge to a 2-decade high, according to this set of data. So, yeah, and then obviously then we had the sea of earnings last night, and I think the market after the sea of earnings that it didn't like kind of went, this ain't good, let's just, you know, let's have a little bit of a cool down. I mean, first one we had was Duolingo, that's down about 28%, and since its highs in about May time, the stock has fallen about 63%. That's a big significant amount. I've personally never looked at Duolingo. The valuations never attracted me to have a look, but when you start talking about the stock falling that much, I mean, is it an interesting opportunity? I don't know. We'll see if you guys on the Patreon, the Discord, vote for me to take a look at it on the stock request. It might be a good one to look at. From what I can tell, I've not looked at the earnings, like I said, but it seems like a few people are concerned that the growth is potentially slowing down a little bit at the moment. So, yeah. We'll see what happens there. Then DoorDash, they came out with their set of earnings, and they had a little bit of disappointing numbers as well, down about 15%. I tell you, for me, the food ordering service, I generally don't know how it's successful. Certainly in the UK, because I think, you know, the amount of money they charge and how more expensive it is. I'd just go get it myself, but I don't know if that's just because I'm a tight bugger. So I don't know. Elf, obviously another consumer brand, that is down 34% there. That's a big whack in the beauty space, but I think we've had the cracks shown for a while that, you know, the beauty space is maybe getting a little bit weak there, but we called it out. You know, Elf was one that I think the cracks have been there for a while, and financial education, I'm sure we're going to make a video about that. I said that he's been shilling this when he's not actually putting it money into it himself, and a lot of people, you know, threw a few things back at me, and I'll see how quickly I have to delete the comments, but we'll be doing a follow video up to that. I said, like, you know, he's not looking at those earnings, and he's not putting money in himself, even though he's promoting it. And the financials showed that today, that, you know, those numbers were very, very poor from Elf. They made an acquisition to try and cover the cracks in the last quarter, and now people are realising and falling down massively. And same for Celsius. You know, I think that Celsius made a big acquisition to cover the cracks of a business that was failing. Maybe not failing is a hard word, but it certainly shouldn't be 120 times earnings. And people have been loving it for the last few months, going, oh, whatever, growth, that's what matters, growth, 2021 market all over again. And all of a sudden they realised, actually, yeah, maybe this acquisition was made to cover the cracks, and that's having a pretty significant drop today. Not a surprise for me, though. I told you guys that's why I sold my shares, and eventually it's caught up. And yeah, I mean, these earnings were terrible. I mean, look at the international growth, 24% now. This was 40% a couple of quarters ago, and now it's down to the 24% range, declining massively. And all these new stores they're getting, and it's showing no growth at all. The growth rate's slowing down. They are getting it wrong there. And people think just because they've made this Alani acquisition, it's going to cover the cracks. You want to trust a company that cannot get the Celsius brand right in the US, they can't grow it into the international, and you think they're going to run this Alani company to the success? No chance. So I think a few people are starting to realise that around Celsius at the moment overall. But anyway, for me, for companies that I own, it was a pretty good day. It's a shame they reported all these positive numbers on such a bad day for the market, because if it wasn't for that, I might have a few stocks that are performing a lot better today. Shift4 Payments. So this stock, I mean, the shorts, I don't know if you saw it, earnings came out. Shorts tried to push the stock down 10%, and then people realised how good those numbers were, and the stock went up over 10%. So a pretty decent swing. However, what has happened because of the negative day is the stock has been sold off in the day. So it's only up 3% now, which is annoying, because if it was a better day for the market, this one might have been up a little bit more than what it is. But they came out with earnings, and the earnings were good. It was good to see them get a lot closer to the analyst targets. The revenue growth was amazing. EPS, I think, came in $1 below the expectations. And they also announced a 1 billion share buyback as well, which for a company that's valued at 6 billion, yeah, it's not too bad at all. So yeah, like that one, and I'll cover Shift4 Payments in full detail on the Patreon for you guys. We also had Shark Ninja report earnings. Stock was up, I think, 16% at one point, but same again, shame it reported earnings on such a bad day for the markets, and that's pushed the stock down a little bit today, but still up about 7%, and really good numbers from Shark Ninja as well. Good to beat on their EPS, revenue as well, growing at 14%, nice beat there. And once again, this one hiked up its guidance as well, which is really good to see. So yeah, good numbers from Shark Ninja as well. DraftKings, so DraftKings was up, I think, like 10% as well, but same again, the market has pulled the stock down a little bit because of the negative day in the market, which is a bit of a shame. So yeah, but $28 now. I said to you guys with DraftKings, I said, you know what? There's a few things I don't like about it, but if you start putting DraftKings to like 22, 23, 4 times earnings for one of the duopoly players in the US sports betting space, and they're going to have the prediction market in the next few months, and they're also going to have the World Cup next year in the US. Like, okay, there might be a lack of iGaming states coming online, but there's still plenty of growth drivers for it. And it's just sold it off and sold it off. And even today, it sold it off today when it had some positive news. So another catalyst that's going to be coming up for them is this. It actually announced a good deal with ESPN. So what happened is Penn National and Walt Disney, ESPN, have terminated their contract, which I can't believe was in August 2023 when they signed that. I thought it was only like last year. It's crazy how fast time is going. But they have agreed to terminate the contract, which is no surprise, because I think when this was announced, people saying, oh, this is the end of DraftKings. And clearly it wasn't. Why ESPN and Disney chose to partner with Penn National was beyond me at the time. Like, it was a shocking decision, and once again, you look at some of the decisions that Disney management team are making. That's why I sold my shares. I could see it was a bad decision, and this is supposed to be like, the management team is supposed to be one of the best around, running a multi-billion company, and sign a deal with Penn National that couldn't even get it right with Barstool Sports, and they think they're going to do it any better with ESPN. I don't know, but anyway, that's a subject for another day. So they terminated the contract, no surprise there. And, people were saying this was going to be a threat when this was signed, and it certainly said that it was the end of DraftKings. Certainly wasn't the case. It's not worked out. They had to terminate the contract. So, once again, shows that DraftKings, this duopoly they have, quite hard to knock them out if anyone comes into the space. But or comes into the space the actual legal way, not the illegal way like we've seen with that company called Robinhood. Anyway, So they cancelled the contract. Literally like a couple hours later is that ESPN announced it's back in business with another sports betting company, DraftKings. So good for DraftKings because ESPN and Disney have kind of realised, you know what, we should have just stuck with the best player in this space, and they've gone back to them and signed the deal. So I'm surprised DraftKings weren't bitter about it, but hey, it's a good deal to sign. So beginning December this year, DraftKings entertainment products will be exclusively integrated across ESPN with full rollout expected in 2026, the company says. DraftKings will also play a major role across ESPN's digital platforms. DraftKings will power the betting tab within the ESPN app, and their customers will receive special promotions for ESPN Unlimited, ESPN's newly launched direct-to-consumer product, which is obviously great to see. So this is great because you look at ESPN, you look at the amount of people that use it, you look at the ties that ESPN have around like the NFL, for example, to be thrown on the platforms, the combination of like what they'll probably be able to do with like advertising synergies would be amazing for them. So yeah, this is a great deal for DraftKings. I'd love to know the actual terms of like what has been agreed. I don't know if they'll ever disclose it. But obviously DraftKings have earnings tonight. They have the earnings tonight, and then we have the conference call on Friday. So we'll see if they announce any deals, information around the deal there. But yeah, so we've got good catalysts here. We've got DraftKings entering the prediction market. We have DraftKings with the World Cup coming up next year. And then we have DraftKings with the launch of ESPN in December. Yeah, you know what? I'd like more iGaming states to be coming online. I'd like more sports betting states to come online. But yeah, these are 3 good growth drivers for the next few years. And, you know, the stock really at the moment now, I think should probably be putting a bit of a bottom in and a bit way too soft and way too much of a drop here. And I think the valuation when you look at DraftKings overall is looking a little bit attractive at these levels. So, yeah, interesting overall with DraftKings and good deal today. I think the stock should probably be up more. We'll see what happens with earnings tonight, saying that, you know, we've got earnings tonight and watch them put a stinker in. But yeah, that's DraftKings. So good news over there overall. So yeah, that's a quick recap of what's going on out there today. Obviously, a little bit of couple of concerns around AI, bit of weak macro data, followed by weak companies' earnings. Some of them not too much of a surprise, but overall I'm happy because, you know, I've got stocks to go buy with my cash pile. The stocks that I own, Shark Ninja and 4, came out with good earnings, and I think DraftKings announced a really nice partnership today, which is great to see. So yeah, not a good day for the market, but I think a good day for me overall. That's a bit of a recap of what's happened because it's been a big explosion in the last few hours anyway. So yeah, thanks for watching, guys. See you in a bit.